Hello and welcome to this February 22nd, 2010 second video version of Invested Central's Chart of the Day. I'm Tom Bowley, Invested Central's Chief Market Strategist, and it's my pleasure to provide you with today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Well, in our first video, we showed how a little bit of a negative divergence formed on the relative chart of the transportation index versus the S&P 500 back in 2003 and 2004 during certain periods of that recovery, that market recovery. And each time that we showed the S&P 500 moving higher but transports failing to confirm that move higher, we then went into a period of weakness and a flag pattern. Now when I look at the 2009-2010 chart, what strikes me are the similarities to what I saw back in 2003 and 2004. As we came off of the low in March of 2009, you can see the S&P 500 started moving up here, and the transportation stocks were leading the market to the upside. This movement to the upside shows that on a relative basis, transports were outperforming the S&P 500. Now they had quite a move to the upside. They did stabilize for a little bit, consolidate, and then we continued moving higher, putting in a higher high than what we had seen previously. Throughout this entire process, we've seen that the S&P 500 actually moved higher. And one thing I actually did not annotate here, but probably could have as well, is you can see a higher S&P 500 right here from May to June. But take a look here. We actually have a lower relative strength number when we look at the transports relative to the S&P 500. So, here we're showing the transports were underperforming on a relative basis during this 1 month period while prices were going higher. I didn't annotate this flag pattern right here, but here you can see a couple of lower lows and lower highs as a result of this. And then we moved up, and as we moved up and broke out, you can see that the S&P 500 did much better. Now the thing that's got us a little bit concerned now is that over the past 6 months, 5 to 6 months, we have seen the S&P 500 continue to stagger higher. And I say stagger higher because it's been moving higher, but doing so without the support of the transportation group. You can see that even though the S&P 500 took out the September highs, we put in October highs, November highs, December highs, and even early January 2010 highs. Even though we continue to put in all those new highs on the S&P 500, transportation stocks never went back up and put in a relative high. So we never got that relative breakout on transports. And even now when we take a look at the market, you can see that the S&P 500 after this rally over the last couple weeks isn't that far off of its recent high, but the transports on a relative basis have a long way to go to get back up to where they were back in September, which is when we saw that relative peak in the transport. So the question here is, are we seeing weakness in the transports because we're going to have continuing weakness in the S&P 500? That seems to be the case. When we look back at 2003 and 2004, we pointed out a few different occasions where that was the case until we started to see more strength in the transports. So what this all points out to me is that we simply need to be cautious. No one sign is ever going to guarantee us anything in the stock market. But when we take a look at some of the sectors and so forth that tend to lead the market higher, you have to at least be somewhat worried when you start to see these groups underperform on a relative basis. So anyhow, let's just be cautious here. If you're playing this market to the long side, maybe you might want to think about hedging yourself somehow, either through covered calls, maybe selling some puts against the S&P 500 as insurance or so forth. Anyhow, I hope you've enjoyed our presentation today, both of our presentations. Be sure to check out our chart of the day every day at InvestedCentral.com. Also, while you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.